I took that production data and really drilled down and we looked at which features that our customers were using and how frequently they were using them. So we could then go to the R&D team and say, hey, when you're thinking about your product roadmap, here are the features for specific industries that are really valuable, right? And they seem to be using the most. And so we could help drive that conversation. So it can make a big impact, not just on the financial part, but in other aspects of the business.
Is this thing on?
Yesterday's price is not today's price.
Thank you, Fat Joe, and welcome to Run the Numbers, where I interview world-class CFOs, operators, and the investors who fund them on how to get the most out of your company's performance. This podcast is a playbook of sorts for ambitious people in the worlds of finance, strategy, and operations. Today, my guest is Anna King, the CFO of Mesh, a spend and travel management platform. On this episode, we cover the juxtaposition, that's a hard word, of automation and storytelling and how one can supercharge the other, the biggest changes in the CFO tool stack in the last couple of years, how she was able to get revenue recognition down to a daily close, woo! Marrying production data with financial data for better insights, what we think we'll look back at as an extinct technology like the DVD player in 20 years, maybe physical credit cards, why cash is still king, her story about working at Freddie Mac during the mortgage crisis and what it taught her about how fast or slow changes in the global economic landscape take to catalyze, her path to leadership as a woman and how she tries to create a culture of inclusion and combating imposter syndrome and the mantras she uses to fight through doubt. Speaking of doubt, Anna has no doubt forgotten more than I'll ever know about the payments world. Fintech wasn't really a thing in the early 2000s, and now it seems like every company has a fintech element to it. Anna is able to explain why this is the case, how the payments ecosystem is monetized by different players, and where it still needs more transparency. She's also brutally honest about her journey to the CFO seat as a female and how she's combated her own doubts, stepping into fear along the way. All this and much, much more after a short word from our sponsors. Mercury knows your financial operations are complex. Founders and finance teams have to pull together different tools, reconcile transactions from different sources, and struggle to get accurate answers. With Mercury, you can simplify your operations with banking and software that power your critical financial workflows, all within the one thing every business needs, a bank account. And with new bill pay and accounting capabilities, you can pay bills faster, stay in control of company spend, and speed up reconciliation. Apply in minutes at Mercury.com and join over 200,000, ambitious startups that trust Mercury to provide the precision, control, and focus they need to transform their financial workflows so they can perform at their best. Mercury, the art of simplified finances. Mercury is a financial technology company, not a bank. Banking services provided by Choice Financial Group and Evolve Bank and Trust. Members FDIC. I'm getting good at that voice. Quick math. The less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. That's the goal, isn't it? But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. Yesterday's price is not today's price. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required. Access from anywhere. You cut the cost of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies, wow, that's a lot of customers, have already made the move. So do the math. See how you'll profit with NetSuite. And back by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. Head to netsuite.com/metrics. That is netsuite.com/metrics. Ooh, yeah, you know your boy loves some metrics. That's netsuite.com/metrics. Please do it, guys. I really need this. Anna, welcome to the Run the Numbers podcast. Thanks for joining me.
Thanks for having me. I'm so excited to chat today.
I feel like I'm coming full circle here in kind of my finance stack evolution because the first virtual credit card I ever sliced anybody was from Mesh about 4 years ago.
It's amazing. I can't wait to dig into that.
Yeah.
Love to hear your experience.
It was awesome. And we can talk about tooling and the like later. But in doing some research on your background, I can tell you're very passionate about two topics in particular: storytelling and automation. And so one of these is inherently human and the other is computer. How do you balance both of these skills as a CFO?
Yeah, it's actually a really great point that I didn't think about before. But, I feel like my role as a CFO and as a finance leader is to give my team the tools that they need to automate and generate financial reports as quickly as possible. And it's my responsibility to set them up for success. And so I think both of those skills are actually learned skills, both storytelling and automation. A long time ago, storytelling was something that was taught and passed down from generation to generation as a way to impart knowledge and wisdom and lessons learned. And I think automation is the same, really, right? We start by doing our work manually and learning what works and what doesn't. And so automation is a way to capture that knowledge from those trials and errors. And really, automation is a way to tell those stories faster, easier, to a wider audience.
That's a great explanation. And I never thought before that automation can actually help you tell better stories.
For me, it helps you get the data faster and spend more time understanding what the data is telling you, right? And gleaning insights from that data. In today's world, there's a lot of hype around AI, and we all know we should be spending our time on strategy and thinking about ways to accelerate growth. And automation gives us that time and bandwidth to focus on what's the most important aspects of our jobs. And from my perspective, what I find really valuable is a real-time dashboard of how the business is performing. An example from my prior company, I was able to connect our production data to our financial data, and I could see up to that minute how much revenue we generated that day. And so it made conversations with the sales team and the management team more productive. And we didn't have to wait until 2 weeks after month end to know how the team was performing or make any necessary adjustments. So it really helps you tell those stories, motivate your employees, get the company focused on what's really important.
I got to flag that for listeners, Anna. You got to revenue on a daily basis?
Yeah, so it was a payments company. So we generated revenue by every payment we processed. And so our critical metric was, okay, how many payments do we process today? And we had 30 of the top 50 banks as customers. And unfortunately, each bank had their own unique pricing model, and so it was a very manual process for billing. But with automation, we were able to automate that and create this real-time, up-to-the-minute reporting.
That's so powerful because a lot of times I've worked at businesses where I wish I could get revenue signals on a faster basis than monthly, and then not even monthly. It's 7 days after the month closes. You can totally twist the levers and knobs to a degree to calibrate your go-to-market much better if you have it on a daily basis. That's crazy.
This was a really great example and it worked really well, but I definitely think other companies can implement something similar, maybe not daily, right? But definitely more frequently than, 7, 8, 2 weeks, whatever that is after month end. You can definitely put these tools in place. It really starts by understanding where that data is stored and how to connect the different pieces together. And then, of course, using a BI tool. There's so many great tools out there that will help automate that reporting.
And you had said financial data and production data, and it brings me back to a conversation that I had with Shruti Lanka of public.com, which is a platform for trading all sorts of securities, bonds, stocks, etc. And she was the one who really opened my eyes to hey, it's not the CFO's job just to own the financial data. You can create basically bespoke insights that you wouldn't get otherwise if you married the production data with it. And the way she explained that to me was a big aha, because at first I always kind of felt this trepidation, the production data isn't really my realm, should I really be there? But then once I started using some of the data from there, I had a much better hold on the business.
Yeah, and I can give you another example. So at that same company, I took that production data and really drilled down and we looked at which features that our customers were using and how frequently they were using them. So we could then go to the R&D team and say, hey, when you're thinking about your product roadmap, here are the features for specific industries that are really valuable, right? And they seem to be using the most. And so we could help drive that conversation. So it can make a big impact, not just on the financial part, but in other aspects of the business.
And you get to a level where you can segment your revenue data on a much more nuanced basis, right? You can do it by segment of the markets you're serving. You can do it based on user activity. And before, I think I was kind of like a person walking around with a hammer in search of a nail.
Yeah, exactly. And there's so many use cases, right? Like marketing can then create collateral that's more specific to specific segments, right? Whether that's an industry or a product. And so it really can help drive that sales motion.
I love that. Yeah. Production data is like the theme for me in 2024. And honestly, it's helped me learn like what the product does at a level that I probably wouldn't have before. I was only looking at the outputs, not the inputs. Anna, I wanted to ask, what's something specific you automated in the last 6 months maybe that helped drive value?
I would say over the last 18 months, but it's a continuous process where we're improving. We've focused a lot on our unit economics. And so now we're able to drill down by customer and understand our profit margin.
Wow.
This is a result, again, going back to connecting those various data sources, but also automating the formulas that drive our cost of sales. So really understanding what those drivers are and what those levers are and building that into our reporting process. And so I think really any company can perform this and can use this as a way to help their business make better decisions. I've done this, as I mentioned, at a prior company as well. And it's really had a huge impact on us, right? We can go through a process now where we look at any new potential prospects or opportunities and say to ourselves, okay, does this make sense? We can model out what that potential profitability would look like.
So if I have it right, you're getting down to like a contribution margin on a per customer basis.
Yep, that's right.
That's sweet. Because a lot of times people think they're slick and fancy when they can do like their contribution margin by like SMB versus mid-market. But that's awesome if you can do it all the way down to the individual customer.
Yeah, and of course it depends on the business, but there's definitely a lot of companies that this would be applicable for.
Mesh is at the forefront of some change within the finance software tech stack. What do you think is maybe the single biggest tech stack since you've been working over the last 2 years?
Yeah, I love to say I'm so happy that the office of the CFO is now the new like buzzword and investment category.
We're like finally getting some love. Like,
Exactly.
and I like to joke that like there must have been like all these product managers like working at the Concurs and stuff of the world for like 30 years. And you're like, they're finance people. They don't need anything that looks good. It's like, well, just because I'm in finance doesn't mean like I want a product that looks like really ugly and is clunky. Like, come on, give us some love.
Yeah, exactly. I guess they just assume we're used to doing things like the most difficult way possible.
Yeah. Playing on hard mode. That's what they thought.
Yeah. No, but that's it. Exactly. Right. For the longest time, it was like these old technologies and processes. And, I find it ironic that I'm at Mesh because at my last company, I hated corporate cards. I refused to let anyone have a corporate card. The CEO had one, but I couldn't stop him. So, I had to live with it. But it's such a pain. I mean, I'm sure you know this, right? The finance team has to track down the receipts. They have to go line by line on the card statement to understand what that expense is for. Someone has to key that into the accounting system. It just becomes a nightmare. And then the other aspect is expense reimbursement. And that creates its own set of problems. And not just for the finance team, but for the employees, right? So the finance organization doesn't know what that employee's financial situation is. And so if an employee is late to submit their expense report, it takes the manager a while to approve it. The finance team has to review it, ensure it's within policy. It can be over a month before an employee gets reimbursed, and that can create a hardship. So yeah. I love what Mesh is doing. I love that there's so many great companies out there building great products for the finance teams.
We had this guy, I won't say what company it was, but it was a prior company of mine. He was on the sales team. I think he was doing like channel sales or something like that. So he always had to take people out to dinner. And he had, we didn't do corporate cards. He was expensing stuff out of pocket. And I remember like in November, he emailed the FP&A team and he's like, hey, I just realized that my bank account wasn't linked to the system where I was getting reimbursements. He's like, so everything I've submitted this year hasn't actually gone through. And so we looked it up. He had spent $67,000 that year, hadn't received a dime from it. And it took him all the way to November. And so we were like looking around like off the record, like me and the people in the bullpen, like either this guy is just making like a crazy amount that it doesn't matter that he's $67,000 in the hole, or he's the most clueless person ever to not notice that no one's paid him back for literally 11 months.
Yeah, that's a very rare situation because normally, employees are, knocking at your door like, a week after they submit the report, like, when am I getting paid?
Yeah. You also are excited about disruption in finance in general. And I'm talking larger, like even in the economic system that we're in today. And you told me you'd like to see the current finance ecosystem disrupted. If you had to paint like a crawl, walk, run, what would these developments look like? Yeah.
So on the consumer side, there's so many countries that are more advanced in their payment system than the US. China has WeChat, Alipay. There's Pix in Brazil. Even Africa has the Pan-African payment system. And there's countries like Sweden, for example, that are almost cashless. So I feel like the US is really far behind. And for consumers, the consumer payment system is really expensive, right? For merchants accepting payments for their goods and services. So I think there's just a lot of areas where entrepreneurs can really disrupt and make that process a lot easier. And, I know that there's this FedNow and real-time payments and, pay by bank that everyone is talking about now, but it seems like it's just really slow to take off. Yeah. And I think it can make a really big impact, especially on the costs, right? And so, I would have said 10 years ago that this would have already happened, but my hope is that we're starting to see that transition. And then on, the business side, that's what we're doing at Mesh, right? We're really disrupting the way businesses manage and track their expenses. And so for me, it's really fulfilling to work for a company that's disrupting and improving the finance operations for companies across the globe.
So let's dissect that a bit. So it sounds like there are two kind of long poles in the tent here. Is it one is the cost is kind of prohibitive at times to accept credit cards, and is the other just like it takes a while for a payment to go through reliably?
Yeah. So the cost is definitely the biggest prohibitor for merchants, right? It's very expensive. And I don't think consumers understand how much those card incentives that we all love really impact the cost of goods and services. So I'll give you an example. I love this deli by our office in Midtown Manhattan, and I usually go there, I'm going to say conservatively, twice a week for this delicious Chipotle sandwich. And I normally don't pay attention, right? I just tap or swipe. But one day I noticed that they're charging 3.5% for card payments. I have one of those consumer cards where I get 3% cash back on restaurants, and that's why I use it at restaurants. But I'm effectively losing 50 basis points, right? And so I just think there needs to be some more transparency so consumers really understand, yes, it's great that we get all these points, but what does that really mean? And how is that really impacting our bottom line and our personal expenses?
Hey, thanks for listening. We'll be right back after a word from our sponsors. Cash is king. As the CFO of a SaaS company, I know firsthand how important it is to maintain a healthy AR balance. If you can't effectively manage cash, you can't service debt, make payroll, or invest in growing your business. That's why I'm so excited to partner with the sponsor of today's episode, Maxio, the leading billing and financial operations platform for B2B SaaS. Maxio helps top SaaS companies like Chili Piper, Crunchbase, and Stack Overflow get cash in the door faster by automating collections and dunning. Gone are the days of manually chasing down invoices. Join the 2,500 plus subscription businesses using Maxio, formerly SaaS Optics and Chargeify, to eliminate revenue leakage and streamline order to cash. It's never been easier to get paid. Visit maxio.com/run the numbers to supercharge your financial operations in 2024. Not only does requesting a demo using the Run the Numbers link help support this podcast, ya boy, you also receive a 10% discount on your first year with Maxio. Woo! That's maxio.com/run the numbers. That's maxio.com/run the numbers. Okay, serious question for all my accounting pros here today. Are you doing what you were hired to do? What I mean is, do you have time to actually be a business partner, or are you buried in tedious manual tasks just to get your journal entries prepared every month? I know how that feels. Leapfin's here to help with that. Leapfin is accounting automation software that automatically prepares and posts reliable journal entries. And that's just the beginning. High-growth businesses like Reddit, Canva, and Seeky choose Leapfin to eliminate manual tasks, accelerate month-end close, and enable accounting leaders like you to provide faster insights that will help your company grow. If you're battling messy transaction data from Stripe, Adyen, Shopify, Apple Pay, and other PSPs, and then battling again to get it all into NetSuite, go to leapfin.com to watch their short product intro video. And if you like what you see, request a 15-minute conversation to learn how accounting automation can help you and your team. Check out leapfin.com today. That's leap like jump, fin like shark. I just made that up. I hope they're okay with it. Leapfin.com. We had spoke with Matt Newcomb, the CFO of Chime, and he had some cool insights just on how they look at the unit economics of a customer and like what their North Star metrics are to know that you landed them. One of the things that he was talking about on the consumer side, which I guess is a lot different than the credit cards and the B2B side, is like if we are the bank account where your payroll gets deposited, we know that like we've got you as a customer, and then we can add services on top of that. It was just something that I thought about as you talked about the credit cards that you choose to use in your life and how people will base kind of the different products that's maybe an entry point to a company, whether it's B2B or B2C, based on one thing, and then they can kind of expand from there. But like you have to get that first experience right and make sure that the unit economics and the cost works.
Yeah, that's exactly it. And that's why, it seems like this pay by bank or account to account payment should be taking off, right? Because the banks have the consumers, they're getting the deposits into their consumer bank accounts, right? So they have the audience, they have the relationships, and they just need to adapt the technology. And obviously we know banks are slow to adapt, but I think hopefully it's starting to change.
It's funny because they do have all the info on you anyway. I'm a CFO and it still stresses me out when I send a wire. Is that normal?
Triple check everything. Yeah, and that's the other thing, right? Now with today's bad actors, right? They are incredibly creative, especially when it comes to vendor payments, right? And so we've had a couple instances where, someone sends a very convincing looking email with all the right attachments, and thankfully, we've caught it and we haven't sent out those payments, but there are definitely better controls that we need in place for any type of business payments, because the bad actors are every day they're thinking of new ways to take advantage.
The level of fraud attempts is like at a new level. It's become a running joke that people at the company will get a text message from fake CJ saying that I need you to go, I'm in an important partner meeting, I need you to go down to a store down the street and buy me a bunch of gift cards for something. Yep. But they always say, hi, this is Carl, which is like my real name. For all the listeners who didn't know that, that's my government name. So they make a joke that like fake Carl is asking for money again, like in our group Slack channel. But like some of the stuff otherwise would look pretty convincing.
Yeah, exactly. And so that's the other great thing. There are a lot of companies, right? We're going back to the tech stack for finance orgs that are working on solving this. For me, it's a no-brainer to try to find those types of companies and use them at Mesh.
You had mentioned, Anna, earlier some countries that you think are more forward thinking in terms of payments. Would you chalk that up to like their governments have better regulations in place for innovation? Or was it like they had a big problem and they just had to solve it in a different way? And it was kind of, what do they say? Necessity is the mother of innovation, or I'm butchering it, whatever the quote is.
Yeah, I think, it's somewhat, yes, I think that is a part of it. I think it's in South Africa, right? They don't use paper checks at all, right? And so that's something that in the US is still a very normal part of business payments, which is just shocking, right? And so I think they've kind of leapfrogged that technology, right? And so I also think it's just the innovation that's happening where they didn't have those sort of older payment systems or platforms. And so they just adopted the latest and greatest, right, at the time. So I think it's a little bit of both, right? The regulation is obviously something here in the US that's, I don't want to say it's not important, but it is a factor in the pace of innovation.
I remember reading something saying that in China, basically the millennial generation like completely skipped the laptop or desktop phase. Like they went straight to mobile.
Yep.
And I imagine there's somewhat of an innovator's curve when it comes to payments and credit cards, or like I'm wondering if like my kids will ever use like physical credit cards or if they'll just use like Apple Pay.
Yeah, that's a great point. I think you're right. I think they may just skip the physical card, right? It's so convenient now. And so I think more and more merchants are, using those types of technologies, and you have less merchants who really need that physical card in order to pay.
Yeah.
Sometimes you see that with hotel rooms, but even that's less and less, right? They have the kiosks that you
Yeah.
can just tap.
I do have this one friend though that like will go out for dinner or we'll get pizza and he'll be like, "Oh, sorry, man, I only have my phone for Apple Pay." But like sooner or later, that pizza place is going to accept Apple Pay, and he's not going to be able to stiff me on a check like that.
Exactly. That's so good. I love it. I have to use that one.
Yeah, like sorry, man, didn't bring my credit card. I don't have cash.
Yeah.
I had tweeted out a while ago. I said to people, "What do you think will be the DVD player in 20 years?" And like 8 out of 10 people said the credit card. Like I don't think physical credit cards will be something that people normally carry around.
Yep, I agree. Which is funny though. Do you think there'll still be cash here in the US?
I didn't think like cash would hang around this long. Like I almost never have cash, but now like when I don't, it's in the scenarios where I really do. So like over the last year or so, I've been trying to carry more, but I've been a bit surprised by how slow cash has been to die. I don't know if you have thoughts on cash though.
Yeah, I think it's sort of similar to my last point is payments are expensive. And so cash really hasn't died out because some merchants, right, you can only use cash. And then, there's there's some part of our society, I think, that would still always prefer to have cash.
Yeah.
So I would say that physical cards would die out before cash.
Wow, that's actually kind of crazy to think about, that physical credit cards, which are in the middle, may stop being around, but cash will always be king to a certain extent.
Yeah.
I realized when doing some research, you'd worked at Freddie Mac during the 2008 financial crisis, and we've been touching on disruption in finance. Can you just take me back to that experience, and maybe you could touch on like how has this either increased or decreased the pace of innovation?
Yeah, so I was at Freddie Mac. I was an auditor at PwC. I was there from 2006 to 2008. And I was part of the team that was valuing their collateral loan obligations, their mortgage-backed securities, asset-backed securities. And so it was a very interesting time, and I learned a lot. And I think, yes, I think for a while it slowed down innovation, right? Because a lot of these products, at the time, they were like the most innovative financial products you could own or invest in. And of course, we know now that there were a lot of underlying risks that investors didn't really understand. And so I think for a time it did slow it down. And I think that was for the best, right? I think we needed to really understand what that innovation was and what were the downsides of that innovation. But I think, even now you could say, okay, we have high interest rates, we had a global pandemic, we have multiple global conflicts, we have a very interesting and challenging political environment. And so I think the best entrepreneurs and companies find a way to excel, and they're quick to adapt and adjust for any of those new normals. And so, yes, for a time it did slow down disruption, but then look at what we have now, right? We have all these amazing companies, right? Fintech really wasn't a thing in 2008, right? And now every company seems like it's a fintech company. And so I think it was for the best, right? We learned a lot of lessons, and those companies that were able to take those lessons and adapt them, I think have done really well.
And I think about those crises, like the mortgage crisis, a bit like when the rainforest burns down. Like you never want something to collapse, but like in order for other plants to kind of get sunlight and to grow, you need something to kind of go away. And to your point, people probably underestimate how many cool companies came out of that kind of 5-year period.
Completely agree. That's such a great analogy.
I do always try to keep that positive mind state. Like when I do see things going on in the economy, like what will this lead to afterwards? So I'm kind of curious, like right now we're going through a period of time where Like there's a lot going on with crypto regulation right now too. I'm kind of curious how that'll impact the financial ecosystem.
You had mentioned regulation previously, and I think, look what happened with FTX as an example, right?
Yeah.
Regulation is important because some entrepreneurs, when left to their own devices, will make really bad decisions,
Yeah.
right? And so I think some regulation is there to protect consumers, especially consumers, right? And so I think it's really important. But at the same time, I think companies need the ability to innovate without overly cumbersome rules and regulations. There's like a fine line of what's too much and what's, when, there are no rules, then terrible things happen, right? I guess Freddie Mac could be another example of that, right? Where things were being done that didn't have a lot of regulation around them, and we ended up in the situation we did.
If you look back on that time period when you were at PwC, like, do you remember like where you were, what you were working on, like when it all started to go south?
I joke about it saying it was my poor auditing skills that caused the crisis.
I hope not.
Because I was the one valuing, right? We were using Bear Stearns, we were using Lehman Brothers. We were the ones saying, okay, the valuation that Freddie Mac, the mark-to-market price that Freddie Mac is using is okay. And so, yeah, I remember like sitting there looking at my work papers thinking, oh my goodness. Everything, we've been doing for the last 2 years.
Did I forget to carry a one?
Yeah, exactly. Obviously I was further down the totem pole. But it was very shocking to think about, right? Like everything I thought was true and all this work that I thought, we were by the book and we were very strict and, it was just a series of unfortunate events, I think.
There's also this misplaced comparison that goes on of like, well, this is what other companies are doing, so it's okay. Like this happens a lot when I look at benchmarks. They're like, well, this percentage of companies are burning this much cash a month or per quarter. And I'm like, well, just because that many companies are doing it doesn't mean it's right or they're all doing it like in a way that I would want to do that. And I look at a lot of these financial crises, people look back and they say, oh, well, we were comparing it to like Bear Stearns or we were comparing it to this other company. It was like, well, maybe everyone should have stepped back, and it's hard to say like Monday morning quarterbacking and say, well, maybe this whole thing is kind of jacked up right now and the comparisons aren't really the way to go.
That's it exactly, right? Look at what happened in 2021. Companies were getting funding where the revenue multiples didn't make sense, right? And they were burning so much. And so I think taking a step back, no matter what that the macroeconomic environment looks like, and really focusing on business fundamentals will prevent those situations, right? So again, the best companies will figure out a way to adapt and survive, and we'll really focus on the business fundamentals, how to continue to grow revenue, but not sacrifice profitability.
We were talking a bit about the rainforest burning down a bit and new things growing up and like within the bounds of innovation, but also regulation. And one thing that came to mind are a lot of these fintech companies out there that are partnering with regional banks because they're like, we're not a bank, but these people over here, they're by the straight and narrow and they're a bank and we can provide other services. And that to me seems like a cool innovation that's coming out of this, while also staying like within some safety guardrails to protect consumers.
Yeah, that's it exactly, right? It's the you have to again have this balance between regulation, and I think where companies and banks have gotten in trouble is where they've been lax on the KYB and the controls in place and the compliance, right? And so it's really important for that. That should be a really important part of any fintech is making sure they have solid controls. They have a risk and compliance team. Then, right, you can layer on all the innovation on top, but that should be the foundation.
In my humble opinion, the like long pole in the tent to any banking innovation or even like with credit cards is just how long it takes sometimes to become a customer. Like I remember my wife was pregnant with our first kid, and she made it through over 2 trimesters before I'd finished the KYC process to open a bank account in Singapore. And I was like, this is just not normal. Like we're almost going to have a kid in the time period it takes to open a bank account here.
Yeah, and thankfully there's some great companies working on that problem too, right? It's how do you collect that data? And I think part of the issue is, especially cross border, right? How do you validate the legitimacy of the KYB information and make sure that this person or this company is who they say they are?
And it does get scarier, I guess, with all the fraud stuff. So that's probably a headwind to it all.
Absolutely.
I want to transition to a different topic here. I want to talk a bit about diversity in finance and just stepping into a big role for the first time and sizing up, like, am I right for this? Because I know it's something that probably a lot of people listening have felt at one point or another. And I want to recognize that the path to leadership in finance as a woman is harder than the average male journey to the CFO seat. I'm curious, Anna, what's your experience been both in navigating, this system and also promoting a culture of inclusion?
Yeah, it's a great point. So Mesh is the first company in my career where I've worked where women represent 50% of senior management. And I think the latest number is about 40, maybe it's a little bit higher than that, percent of the company as a whole. And so, yeah, there are usually two reasons for lack of women in leadership roles, and in the CFO seat specifically. And, one is a pipeline issue, right? A lot of women don't study certain fields like the typical STEM fields, science, technology, engineering, math, and to some extent accounting and finance. And then the other is the work-life balance. And so I noticed as I progressed in my career, my female colleagues had to make choices whether to focus on family and flexibility or career advancement. And so I think this is an issue companies can solve. And I believe Mesh is proof of that, right? We give our employees, male, female, autonomy to work when they need to and to take the time they need to take care of children or aging parents or whatever the life situations they might have. And so I think we were chatting about a little bit earlier about how during the pandemic companies, it was proven, right? Companies could still perform and grow with a remote and flexible workforce. And so I think that mindset shift has allowed women to continue in their careers while they also build a life outside of work. And not just women, right? For the families or, even for people, like I mentioned, who might have aging parents, right? They need that flexibility and they're still great employees. They still get their job done and they still help benefit the company.
I really like how you broaden it to not just like kids, but also like aging parents and taking care of your whole family. I have to admit, so I have four sisters. I also have a brother, but I think like there's a certain cultural expectation that like when my parents get older, like my sisters are going to really pitch in and help, right, wrong, or indifferent. Like I'm not going to like go anywhere and not help, but I'm realizing now it's an understanding that the onus is kind of implicitly on them.
Yeah. And unfortunately, I know a lot of people who have left their careers because of family members that they needed to take care of, right? Adult family members. And so the company could lose a valuable employee if they don't take these things seriously and provide an environment where that employee has that flexibility.
We were talking to Jenny Decker, the CFO of Front, and I remember I was saying, hey, I'm torn on taking the full paternity leave at my company. I'm really nervous. Like I don't do well with time off, and B, I'm like nervous that like the wheels are going to fall off if I go. And she said, remember that your paternity leave is not in service of you, it's in service of others. I was like, what do you mean by that? She's like, you have to set an example that you can leave and come back and things will be okay for other females to feel like, I can do the same thing. And it kind of hit me that if guys don't take time off and do something similar, you're kind of taking advantage of like being able to not get ahead, but like you just don't have to pause. And you're also not making a cultural norm within the company that like we expect people to take time off. That
is absolutely brilliant. And I agree completely with that. Right. And it's something I try to set the example, not just with, it's not just about paternity leave, but it's also, time off, right? Setting the example that your employees should have a work-life balance, I think is really important. But yes, that is such a great point about how, when fathers or men take time off for paternity leave, how that really helps women and mothers feel like they have the ability to do that and not fall behind. I still have a little bit of time left that I can take off. And
our head of HR is incredible, and she's like, "I'm making you take that off. Like, don't worry, I'm coming back later this year." And I'm like, "I know, I owe it to you, and I'm actually kind of excited for it. So cool." The next topic I wanted to talk about was imposter syndrome. Does that ever hit you?
Oh, yeah, of course. And I think it's something that, a lot of people struggle with, maybe not a lot of people admit. But that's why I love your podcast, right? I get a chance to hear
Thanks.
from CFO colleagues and I hear their stories, and I have the opportunity to recognize or to hear challenges and doubts that they have, or challenges that they were able to overcome and how they overcame those, and to learn from those situations. And so, yes, I deal with self-doubt. I feel like an imposter. I get very nervous to do podcasts.
Here you are.
And yet here I am, right? But when that happens, right, when I'm feeling that way, I try to remind myself of all the ways I've succeeded, and especially those times where I've exceeded in situations that were challenging or it didn't seem possible. And so one example is I helped sell a company, and I had never sold a company before, and there was a call between me and 20 plus other people from the potential acquirer. And, on that call was, a top tier accounting firm. And they asked incredibly detailed questions, and it was just rapid fire. And I was able to answer all those questions and close out the financial due diligence. And for me, I'm really proud of how I handled that conversation with incredibly smart and more experienced people on the other end.
Yeah.
So that's something I try to remind myself when I'm ever feeling, some self-doubt.
I want to call this out for listeners because I think a lot of us will get through these things, get to the other side of something that was very challenging, or you didn't know if you had the requisite skill set to get through. And we just like chalk it up like, okay, check. But like, you don't come back to it in those moments of doubt and say like, remember this really hard thing I did? Being able to recall that, not in like a bragging way at all, but just like, no, I've been on a stage before where I was challenged and I had a skill under pressure that was tested and I came through okay.
Exactly. I think it helps, right? Gives you that confidence.
Adam Ante, CFO of Paycor, was telling this hilarious story on the pod where like they were pricing the IPO, and I forget what the share price was, but I think they said it's $26 right now, but we think we can get it to up to like 28. And and they're like, "What do you think?" And like everybody in the room turns to him, and he's never taken a company public before. He's like, "I think we should do 28." And like it added like 25 million more to like the primary raise they were doing. But he said, in the back of my head, I thought somebody was going to open the door and be like, "Hey, who is this guy? He's got no idea what he's doing right now."
Yep. It's a great example. And we need to hear more stories like that, right? I think it helps to hear that it's not just you going through those moments.
One of my buddies who's been through the gamut as a CFO texted me the other day, and he said, I love the segment, which we'll get to later, where you ask each CFO for something they've messed up, because all I seem to see on all my feeds are how CFOs are crushing it. And every once in a while, I just need like a tidbit of like, hey man, today sucked.
It's secretly my favorite part too. I guess not a secret now.
Yeah. Next one here, finding your own voice. I feel like especially like when you step into a new org and you're like meeting all your peers in the C-suite, is that something that you think you like finally achieve, you get to the last level, or is that something that's constantly evolving?
Oh yeah, I think it's always evolving, right? It's a skill, just like, I mentioned storytelling. So you're constantly, figuring out how to communicate your point across in a way that will influence others. And, as a CFO, a lot of times it's really important that you have that contrarian voice in the room, right? You need to be able to push back. You need to sanity check. It's definitely not a comfortable part of the role. It's not something that comes naturally for me, at least. But it's really critical to help the company succeed, right? You need that ability to. It's not just saying no, but it's saying, okay, well, but have we thought about this? Or here are the risks that could potentially happen if we go down that path. And so it's really important to be able to find that voice and be able to speak confidently, present your ideas in a way that people will listen to.
Yeah.
And then as a manager, at this point in my career, my goal is to help my team and others find their voice. So, I really want to make sure that I give everyone a space to be heard and participate. And, I'm careful to make sure that, if I don't see someone speaking, right, make sure I'm giving them that space where they feel comfortable to say something or to address ideas that they might have.
That makes a lot of sense. I think the biggest development for me, and it's something I'm still working on in terms of finding my own voice, is saying things where I'm attacking the problem and not the person. I think I thought the two things were the same thing when I first started, and I've since found out that it's kind of how you frame something up to help you achieve the same thing.
Yeah, it's a really tough skill set. It's those soft skills, right? It's something that you learn over time, and you have to make mistakes, right? I think we've all been there where we thought we were giving good feedback or, being helpful, but it didn't come across the way we wanted it to.
In doing my research, I also realized you worked your way through college in a full-time role. That's incredible. It sounds like you had a boss who shared an inspirational story with you about perseverance that stuck. I was wondering if you could share that.
Yeah, it was very difficult. I had this amazing boss, though. His name is Kirk McKinnon, and he was a really great influence on me. He was a great boss, but more importantly, he was very supportive. And so again, when I talk about that flexibility, right, that was something that, before I even graduated college, I got to experience a manager and a leader like that. So he sent me an email at it was like a really difficult time. I was juggling work and college and coursework, but the email was about perseverance. And it was exactly what I needed to hear or read at that time. And I printed it out and I kept it with me for years. And it really hits home when you're working at startups, right? Startups are incredibly challenging. Every day there's a new problem to solve. And some days you feel like you're on top of the world and you have the best product. And other days you feel like a failure and the competitors are eating your lunch, right? And so, you have to push through those times and really believe in yourself, the people around you, and the company that you're building. And so that was really instrumental in kind of changing my mindset.
Do you think, since somebody kind of picked you up in that moment, have you ever sent a note or something like that to somebody else to kind of return the favor?
Yeah, I do want to pay it forward. And I find myself really trying to encourage those around me, especially my team, but, people outside of my team as well. Those words of encouragement that I give people, right? Really believe in yourself. You can do this. Don't let the world get you down. Keep pushing through. And so it's something funny I like to say to people. And, if I feel like they need an extra encouragement, I'll let them know, hey, you're a badass and you don't take crap.
That's a good one. We got to put that on a bumper sticker. Yeah. All right, Anna, I'm going to take you into what we call our long ass lightning round. So it's your turn. What's an example of something you've screwed up on the job?
I'm going to give you two because I feel like one is something totally dumb, a mistake that I made that I'm still haunted by. I sent out financials to investors and the board of directors where the balance sheet didn't balance. It's like the one, mistake you should never make. And I'm usually very careful to triple check anything, but I was trying to do things too quickly. So I've learned to give myself time. I walk away, then I come back, I review everything. And it's amazing those things that become obvious that you didn't notice before. And then I think the more critical mistake I made was not hiring the right people sooner. So, we mentioned several times, right? Startups, finance teams are usually very lean. They tend to do more with less. But as a company scales and grows, having the right people in place makes a huge difference between a successful outcome and a failure. And I've definitely made the wrong hiring decisions over the years. And so now, it's important to hire sooner than you think, right? To really build that team, to put those technology solutions in place to allow your team to be successful. So that's something I take more seriously than I did before.
A theme that I've noticed is finance people tend to help everyone else budget for their headcount and then forget to do their own.
Yeah, exactly. And so it's important for finance leaders to make sure that they have the support and the team in place, right? We can't do automation. We can't do storytelling if we don't have those fundamentals.
If you could tell your younger self something, knowing what you know today, what would you tell her?
I wish someone would have told me how important it is to network and how networking is so critical for obtaining roles, for winning customers, hiring people. I didn't appreciate that when I graduated college. And early in my career, I think I missed opportunities where I could have built long-term relationships with people, but I wasn't focused on it. And so I think to me that was just a missed opportunity. And then the other one I would say is, look, we are all there, right? Working late, nights, weekends, right? And so I think there's this balance between pushing yourself and enjoying the only life you get to live, right? And so for me, I've tried to think more about how I'm spending my time. And I think that also plays into automation, right? And efficiency. So I want to spend my time doing things that make a difference and not just, working hard.
Every email I send that I think I'm being productive, I'm just asking for someone to basically send another email back. And I think I'm more conscious of where I push the pace on certain things. Whereas I think at the start of my career, I would constantly try to just continually put the ball in other people's court, which is what you want to do. But I would do it to a degree that was like, now I'm just waiting for everything to come back even sooner to me. And that's been like the biggest unlock with time, to be more cognizant of where you're pushing the pace on certain things.
Yeah, and prioritize, right? Not everything. It's difficult, right? I think for finance people, that's kind of the mindset, right?
Yeah.
You want to check the box, but it's important to figure out, okay, what's worth it and what isn't.
Can you walk me through your finance software stack? What tools do you use today to get the job done?
Yeah, so we have NetSuite, and then we use Mesh for our corporate expenses, and then we have connected those systems with Salesforce and a BI tool. And right now we're implementing some RevRec systems, and I'm looking for potentially augmenting that with other tools out there.
I'm sure you'll get about 100 BDRs eager reaching out to you after this podcast. So you just set yourself up there. Yeah. What's the craziest thing you've seen someone try to expense?
I was going to say I had someone submit a $50,000 expense report, but you kind of beat me to that.
Oh, wow. Okay.
And it was, 6 months of expenses that they just, they knew they needed to submit, but they never did. I had someone submit an expense reimbursement request for a massage at the airport.
No way.
And I think they just thought, I'm working late. I have this late flight, and it's owed to me. So
did you approve it?
I did not, but eventually the CEO kind of caped. But it was definitely the weirdest thing I've ever seen.
Yeah, it's just an odd conversation to have airport massages.
Yeah.
Anna, this has been a blast. Thanks so much for joining me and carving time out of your busy schedule.
Thank you for having me. This has been so much fun.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.